Way Up with Angela Yee. I'm Angela Yee. Jasmine from the Jasmine brand is here, and my Wealth Wednesday partner, Stacey Tisdale, is here.
Happy Wealth Wednesday, and we are going way up with a very special lady today.
Yes, Daryl Fairweather is here, chief economist for Redfin.
Hello.
Hello. Last time I saw you, we were on the Breakfast Club, and it was about a year ago, actually.
Yes.
And we were just talking about the housing economy and the crisis, right? Are we still having a crisis?
I mean, the housing problems are still there. The big problem right now is a lack of inventory and high mortgage rates. So it's definitely not easier, just different problems.
It's always been a lack of inventory, but just when you talk to people anywhere, they're talking about, well, you know, I can't do this because the recession's coming. I can't do this because the recession's coming. While we have you here, she was also a researcher at the Federal Reserve. Yes. Can you please give us some context? Black unemployment, lowest level ever. Unemployment, lowest level ever. Inflation numbers getting better. Talk to us about the reality of this economy going into a recession, especially with such a open Fed chairman.
Yes. So I think the disconnect is that historically, anytime we've had inflation this high, we've had to raise interest rates and send ourselves into a recession to get that inflation under control. But this economy is really unlike any other economy we've seen before. Like, people are losing their jobs, but they're finding new jobs and they're still getting paid and they're still spending money. So even though the Fed has done all this work to raise interest rates, the economy is still plugging along. I'm hopeful that we'll have what they're calling a soft landing, which is where we get inflation under control without a recession. But there are economists who think that that's not possible, that we have to have 5% or more unemployment. That's for everybody, not just for Black people, in order to stop inflation. But the benefits of having this high inflation, tight job market is that the people at the bottom, low income, service workers, low wage workers, are really getting the biggest boost from this. Their wages are going up right now and unemployment's going down for them. So it's not like all bad news, this kind of economy.
Can you explain, since we're talking about this economy, this whole thing that's been happening with mortgage rates? And so I see all this on social media, and I've seen articles, but like I always say, you don't know wherever you're getting your information from. It could be true, it could not be, it could be half the truth. Where they're saying that the better your credit score is, you're going to suffer when it comes to interest rates, and people who have a lower credit score will benefit. So can you tell us about that plan that Joe Biden put forward and what it really is?
Okay, so if you have a better credit score, you're going to get a better interest rate. That was true before. That's still true now. What they've changed is just like the gap between the interest rate you would get if you had the best credit score versus an average credit score, because they're trying to help people out who didn't have the ability to buy a home when interest rates were so low. They're trying to even the playing field a little bit. Some people are mad about that. They think it's unfair. But the fact is that there's always this kind of what they call cross-subsidization, which means that, like, if you were in the bucket of, say, 700 to 800 credit score, all those people kind of get the same interest rate. So the people with the highest ones are still subsidizing people with the 700 credit score. Now they've just kind of made that more broad, where people with 600 credit scores can get something a little closer to somebody with an 800 credit score.
That is a way better way to explain it.
Yes. I'm less scared now.
People are like, that's not, because people are like, that's not fair. I worked really hard on my credit score, and I shouldn't have to suffer from that.
Well, I think it's always
angry.
Yeah, it's always a debate, like, how much should we make the gap? Like, how big should the gap be between the high and the low?
I'm all for if you don't have the best credit score, because I didn't have a good credit score when before I worked on it. So I'm really for having not the best score, and then having leveling the playing field so that I can be in a position, or those people that have those scores can be in a position where they can buy, and it's not as bad as it was before. So I do like that concept.
Yeah, what I love is Jasmine will text me every time her credit score goes up.
Yep, sure do. Yep,
screenshot, but
every month.
It's fun.
I send it to her every month.
Gotta celebrate the wins.
Well, because it's been going up, but if it's going down, I'm not going to send it to you.
I know, right? We're talking about credit scores, and since Silicon Valley Bank and all this, worrying about banks, banks are going to tighten their credit standards. It's going to be harder for people to get credit, get loans. There's an argument that there's too many banks in the United States in the first place, and that there's really not a banking crisis, but it's still going to get harder to get loans. Can you tell us about that?
I don't think that's going to be universally true. So most of the time, people's mortgages, when you get a mortgage with a bank, it ends up getting sold to like Fannie and Freddie, and it ends up with these government-sponsored entities. But there are some loans, like jumbo loans, that stay on the bank's balance sheet, and those might be affected. That's what First National Bank was doing. They had these jumbo loans, and JP Morgan historically doesn't like them. So if you're going for like a really expensive property, you're getting that really big mortgage, you might find that it's harder to get a loan, or you might get a higher interest rate. But I think most people aren't going to be too affected.
Now, what do you think about taking advantage of something like what's happening in Newark? Did you see the article now? Mayor Ras Baraka in Newark is saying that if you were a resident of Newark for a minimum of 5 years and you can prove that, you can actually buy a home for as little as $1. Some of these homes that are being seized by the government. So how can people take advantage of something like that? And can you talk about the benefits of that?
Well, I think that program can help in terms of displacement, like making sure that the community stays involved with this real estate, because especially for these but less desirable properties, the people who are going to care the most about investing in them and making it something that the community can benefit from are the people who have been in the community long term. So I think it's going to help with that. I would caution people a little bit that, buying a property, especially one that needs a lot of renovations, is a big investment. You got to make sure you have the money, have the financing. Yeah, to do it, it's a really big thing to take on, especially in this market when home values aren't really going up right now. So I think it's good, but on the other hand, I think people should, go in with open eyes.
I see that a lot of developers have been having issues as far as buying houses and trying to flip them. I've seen the percentages of how many of those flips are actually people are getting less money than they invested. So for now, is it developers kind of sitting out in this housing market?
Well, Redfin did a report recently that showed that 1 in 7 investor sales have been at a loss, meaning that they're selling for less than what they bought it for. So that just
can you imagine?
Yeah. And that's not even counting like real estate fees or property taxes or all the other expenses that go into owning and selling a home. So investors, I think, are getting scared by this market. They're not as eager. That's opening up some opportunity for regular home buyers, though, especially like FHA borrowers and VA borrowers. So it can be good that investors are backing off.
Yeah.
Well, talk about that a little bit, because there's still a lot of people out there who, that's an aspiration, to buy a home and to flip a home, because they saw so much wealth created like that recently. But it's not always the best idea, especially with the cost of getting goods and services and stuff now.
Yeah, and flipping a home is getting more expensive. It's more expensive to hire the contractors. It's more expensive to get the materials because of inflation. And then you don't have the benefit of rising home values right now to offset some of those costs. I mean, it's still very doable. And, flipping is really short term. But if you're looking to invest in a property and rent it out for the long run, then now could be a good time to do that.
What about renting, right? Some people would feel like I have to own a home. I have to buy a home. But in certain instances, and I was just reading an article about this, how you should just rent. And if you're not in the position to own, just relax.
Yeah, I'm not against renting. I think the thing people need to be aware of is you still need to save. Homeownership is an automatic savings. When you pay your mortgage payment, part of it goes to the equity, and that builds up your wealth. If you're renting, just make sure that you're still setting aside money for like your 401k, your kids' college savings, or whatever it may be. And if it's not automatic already, you set up an automatic system so you're always putting away money every month and you still have that benefit.
You're a behavioral finance nerd.
Yes.
The original behavioral finance nerd. Exactly what Ann just talking about, though. Let's talk about it in our community. So I was looking at a study. Wealthy blacks have a majority of their money in real estate compared to wealthy whites who would have much more of a percentage in stocks. Blacks used to be property. We were shut out of the market with things like redlining, the GI Bill. So we have this real... You have to have a home or you made it. So talk about our psychology around that a little bit, and how it's not always the right decision for everybody.
Yeah, I mean, it's the American dream to have that house and to have a piece of land that belongs to you. And I think, like you said, especially for Black people, we've been shut out of home ownership, and we've seen all the benefits that other people have gained from it, that it feels like that is the correct route to building wealth. It's not the only route, so I think people should be aware of all the other things, and there are tax advantages to putting money in a 401k or other things. So, but homeownership, I get it, and it's also something that you can pass down generation after generation. People whose parents and grandparents were homeowners are more likely to be homeowners themselves. So having a home can be something that you have for your children that you can pass down and show them, like, this is how you go about it.
Yeah, something I had to learn was I was all ready to get this hard money loan, and then I was talked out of it by John Hope Bryant, who was and those loans can be very predatory. And so if you're not in the position where, okay, if something goes wrong, because you could lose your home, right? If you go about it that way. And so if you have to go that route and it's your first home that you're buying, then I feel like that's an indication that maybe this is not the move for you at this time.
I think that you should make sure that you're still putting away money for your emergency savings. If you lose your job, you're still able to make your mortgage payment. Like, don't push it to the edge where you're putting all of your disposable income into your home, because if something goes wrong, then you might end up in a really bad place.
And like I feel something always goes wrong.
It
You have to
does.
really anticipate that. I've never had a completely smooth situation.
The parameters are supposed to be never spend more than 30% of your income on your house. I don't know anybody
Right.
who can stick to that rule, and
Especially in New York.
Yeah, and also make sure that you're gonna, if you're gonna buy something, that you're gonna stay in it or invest in it for at least 5 years. How important is that, and how difficult is that?
I think for a lot of people, it's unrealistic for the 30% limit, especially if you're a renter. I mean, I think people should think about it long term. It's okay to spend a little bit more than that if it means that you're living in a place where you have a good job, where you'll earn more in the long run. I think you should think about it more as a long term decision. But make sure that you have money for the things that are emergencies, like that. Housing cost, whether it's a mortgage payment or a rental payment, it's going to be there every single month, and you need to figure out a way to make that payment no matter what happens.
We did a campaign during the pandemic. So I remember I was away, called Real Estate Reset. And what was very exciting is we partnered with an online mortgage broker, and how online borrowing takes so much of the bias out. And Black women were really kicking butt in terms of leading, home ownership. And I know you're putting together a lot of your knowledge, and being an economist as a Black woman, to kind of tell that story. Tell us about that.
Well, Black women are far ahead in terms of education and being employed, so it makes sense that they'd be ahead of the game for home ownership too. And I think they also recognize the generational aspect to it. Back to what we were talking about when it's the right time to buy. I get a little bit nervous right now about people, taking low down payment loans and getting these high mortgage payments with these high interest rates, and maybe them being a little bit on the edge.
We get stuck. They're screwed.
Yeah, exactly. But you know what? It's also really important for fighting gentrification, because if you're in a community and it's changing a lot, new people are coming in, the best protection you can have is to be a homeowner, because then when home values go up, that's a good thing, not a bad thing.
How can you assess whether or not you are ready to buy a home? Like, say you're renting right now and you want to know, can I really afford this? How do you kind of assess if you can financially do it?
I think you should, get out the paper and pen and write down your budget, figure out exactly what you're spending on every category, and also think about how that might change when you become a homeowner. Maybe you're going to be spending more money on your lawn or landscaping or home improvements. Maybe you're living farther away from your job, you need to commute longer. Maybe you're closer to your job and you commute less. All those things will change, so you need to make sure that your budget is reasonable and that you have a little bit extra left over for that rainy day fund.
And I want to talk about Chatbots, because I saw that Redfin has launched this plugin that is going to help people find their next home. Some people are very nervous about artificial intelligence, but you guys have been embracing it. I saw you talking about it. I follow Daryl, and you should follow her on Twitter for sure.
She was
great information
raving about
there.
your social media and how thorough you are in breaking things down.
And also fun, but you also were using it, I think, to fix your coffee machine.
Oh, yeah, it was.
Oh, my goodness.
And things like that. So how can people embrace this technology, but then also at the same time, how do we make sure that we're protected as individuals here in the United States? People are concerned that this is taking over. How do you live with that and also work alongside it?
So the important thing to know is that with automation, it actually creates more jobs than it destroys, but it does destroy some jobs. So some people, if you have a job that's very rote, where it's looking at data or writing email, something that ChatGPT could do, I think you should kind of have a plan for what your next move might be. But for a lot of people, it's going to be a tool that makes you more efficient. For our real estate agents, if they're able to just type in right away, what are the homes that fit my buyer's criteria, and then they can edit that and kind of get out the stuff that doesn't make any sense, because there is some nonsense in ChatGPT. But if you have the expertise, you can sift through that, and I think it becomes a tool that makes you better able to do your job.
Yeah, so how does that work for people? Let's just say you're going on Redfin, you want to find a home. So the average consumer can go on there and use ChatGPT, or is it really for the realtors?
So right now, it's only through the ChatGPT app, and you have to go on a wait list to get the plugins. It's a very limited audience right now. It's kind of just testing it out. Okay. But yeah, if you go through ChatGPT, you go on the wait list, you get the Redfin plugin, then you can start talking to ChatGPT, which has all of our Redfin listings in there.
And the real estate market is changing so much. I also feel like realtors have had to adapt in many different ways. So it's not as traditional as it used to be as far as where they work from or even services that they offer. What are some things that you think need to happen in that? Like I've seen some real estate companies will actually help fund you renovating your home, before you sell it and things like that. And then they can just deduct that from the price once you sell the home. What are some things that these real estate companies need to do to keep up?
Well, Redfin has really been embracing they call it the one-stop shop, where we'll do everything from your mortgage to your title to renovations. When I sold my home with Redfin, I was already in Wisconsin. This was during the pandemic, and I had to sell my home in Seattle from across the country. And Redfin came in and they helped with the renovations. They organized all the contractors. They did all that work for me. Yeah, so it was really convenient, and I got the company discount, so that was nice too.
Oh yeah.
Yeah.
Next real estate
To the discount.
Right? Love a discount.
But I think more and more agents are having to walk people through the whole entire process, because it is complicated. There's so many things, and it's so daunting to even figure out how to get that hole in your roof fixed, or how to paint your house, or how to stage it, and then the loan and the title. So having it all in one place makes it a lot more convenient.
Can you talk a little bit about regional challenges? Climate change,
Yes.
for example. It's not, if I want to buy a house in Florida, if I want to, buy a house somewhere else, it's really having an impact on things people need to consider.
Yes. And actually, we did an experiment at Redfin with some economists at USC, where when we launched flood information on the website, we had half of the people see it and half the people not, so we could test how seeing flood information impacts buyers' behavior. And the people who saw the flood information went on to bid on homes with less flood risk.
Right.
So what that goes to show is that if you show people the climate risk, they do respond, they do change their behavior. But big picture, people are actually moving to places of the highest risk. Florida is the top migration destination. 5 out of 10 cities on our top migration list are in Florida.
Wow.
It was booming during the pandemic, and it's still booming, and it seems like it's going to be a problem eventually.
Yeah, I guess people also like Florida because of taxes. I'm sure that plays a huge
That's
part.
the first thing that pops to my mind too.
Yeah, everybody's
taxes.
like, I moved to Florida, so I didn't have to pay the taxes that I have
Right.
to pay. New York is, insane when it comes to taxes. It hurts.
Yeah, taxes are a big draw, the weather, and also baby boomers are a really large generation and they're retiring. So I think in the next 10 years, I think Florida is still going to see a lot of in-migration.
Now, when it comes to offices, I was reading an article recently about office spaces and how this is about to be a crisis, right? Because when it comes to these strip malls and people not working in an office and working from home, people are concerned now about that market, commercial real estate. So what is your take on commercial real estate and where that leaves us?
If it's a crisis, it's a very slow-moving crisis, because the leases for commercial buildings tend to be 7 years long. So it's not all going to happen at once, and hopefully that gives developers and owners of these buildings some time to prepare. We're seeing a bit of return to office, like Redfin is calling people back out in New York. It seems like a lot of people are back in the office. I think rents are going to come down for corporate space, and the offices are going to end up using more space per person. Like a couple of years ago, there was this big move towards the open layout and cramming as many people as possible into these little tiny desks. So hopefully this will reverse that a bit, where now that rents aren't so expensive, these offices are able to use more space, and you get a little more breathing room in the office.
Yeah, because we've seen some major retailers shutting down too.
For sure.
Oh, yeah.
Yeah, I just saw they're closing all these Burger King, then Bed Bath & Beyond, and all this. So I'm like, there's a lot of retail space available. I still see that everywhere I go.
Well, in San Francisco, a lot of it has been because of the crime that's been happening. And that ties back to housing, because you get crime when you have a lack of affordable housing, because people start getting desperate. So it's all connected.
Now, you also have a book coming out.
I do.
So I
Well, not
wanna
until
make-
next year, but yes, we can talk
You're
about it.
working on it.
Start
No, we
talking
have
about
to.
it now.
Okay, because that's very exciting. So let's talk about Daryl Fairweather, because you're going to share some of your story with us, which I think is so interesting for people to know. So what made you decide this was a time for a book?
Well, I feel like I've gotten to this point in my career where I'm pretty well established, and I wanted to write down how I got here before I forget it, before I kind of get out of touch. And
That's
also,
funny.
Yeah, and also, as an economist, there are so few women of color, Black women, who are economists, and I really wanted to break it down, economics, for someone like me 10 years ago. I wanted to put it in terms that would be exciting to me. A lot of the times, economics textbooks and lectures, they focus on white men. They tell their stories, but we have stories too that apply to economics.
Yeah, I saw that because we got a little bit of a tease of it. So Freakonomics was a book that kind of changed your view on
Inspired you.
things.
Yeah, it
that was a
did.
big one.
Yeah, Steve Levitt was my advisor in grad school.
Oh,
He's the
nice.
author.
Yeah.
That is not a game. But so your parents, this is not necessarily what they wanted you to do.
No, my dad was warning me not to go into economics. I went to MIT for undergrad, and he thought I was going to be an engineer. And when I told him I wanted to do economics, he was concerned that I was going to face prejudice. I was going to face bias because economics can be subjective. It's not like just math and science where the right answer is the right answer. Economists don't want to admit this, but economics is subjective. And because there are so many white men who dominate the field, we usually only see it from their perspective. So on the one hand, I knew I would face like a disadvantage, there being not that many role models for me. But on the other hand, like I felt like an obligation kind of to be one of these people that breaks into the field.
It's a lot to admire. I started at Wall Street as a cash manager and then was about to go into an economics training program. And that's exactly when I raised my hand and I said, this is not what I want to do. That was a long time ago.
Right.
Well, so will we
Not
get
easy.
to read about some of the obstacles that you had to face? Because I have to imagine in many rooms and spaces, you might be the only Black woman.
I was the only Black woman to ever get a PhD from the University of Chicago in economics, and I believe that's still true. So,
Doctor.
yeah. So I mean, there are like subtle ways where it's a bit rough, just because like you don't have people that look like you that can be friends with you, and there are like also subtle things like, you know, who gets picked for your study group or the way the professors treat you or view your potential. It was something to overcome, but I'm here.
I feel like
I'm
if I
here.
would have seen Daryl Fairweather when I was young, I'd have been like, I want to be an economist.
Yeah, because I feel like we don't really hear a lot about these kind of professions and the kind of work that you do.
Yeah, and economists get paid, so I feel like a lot of people, I mean, it's real. It's true.
Yeah.
I think that, like, people don't see it as a path for them. There are so many, like, niche professions that people don't hear about, but this
Right.
is a path for people.
I love it.
And there's so many interesting things going on in the Black economy right now,
Yes.
particularly with regard to wealth building, and the stories are not being told
Yes.
at all, and they're not being. I was asked to be on a popular business network and talk about. Please tell us, come on and talk about the wealth gap and how Blacks aren't investing and how they're like. I'm like, when was that report you're looking at made? And they're like 2019. I'm like, well, let's talk about what's happening now. It's a completely different world, and it's still not talked about or considered even by economists you're listening to on the news.
And also, like, you can have a fact and figure, like, how the job rate's going up for low-income people. And a certain person will have one explanation for it, which is like, they needed to, like, low-income people, their savings needed to run out before they got back to work. Or you could have another perspective, which is like, hey, the pandemic was really traumatic for people. Black and low-income people had the highest rates of COVID. Maybe they needed to take a pause before they got back to the market.
Mm-hmm.
And which story you hear depends a lot on, like, the background that person has and
And
who
the
they're,
media
who they're,
outlet.
and who they're interacting with in the community. It's not there's not one true story. Maybe there's one fact, but there are so many stories that could explain that fact.
That explains the why.
Yeah.
Exactly.
Now, as far as you as an investor, what are some things that Daryl Fairweather invests in?
So I have a venture capital fund, and I get really
Small detail. Wait, back up on that. Tell us about that.
yeah. It's called Ditech Ventures. I got involved because I did an angel investment in my friend's cannabis company, and it just got me into venture capital. I ended up linking up with the venture capital firm that invested in him, which is Ditech, and they're all about finding founders who aren't really being served by the venture capital community. So we have this one founder for this company called Snowball, which is all about providing financial advice for people from certain communities, like the Hispanic community.
Mm-hmm.
Like, so much of what you invest in depends on your culture and your psychology, and you kind of need somebody who understands your perspective. So this company is all about building a platform for that. We also have a vodka company called Pride Vodka, which provides alcohol, but you can actually invest or donate to a LGBT charity while you buy the vodka. So that's like a little behavioral economics thing that you combine a sin with something beneficial. And so, yeah, all of these companies, they serve communities and they serve areas that aren't really being addressed. And those are the kind of investments that I love. Like, if we can do something that helps the community and makes money at the same time, that's what I'm about.
I love that. All right, what is it again? Ditech Ventures.
Yes.
Ditech Ventures.
Yes.
We'll be
DITC.
calling you later.
Yeah.
We know about a platform for Black investors.
Yes.
There's a color that we
Yes.
We're talking about. Last thing one of the things I wanted to touch on. Where in the United States do you think is a good place to be buying real estate regionally?
You know, it kind of depends on your personal preference. If it's just a pure investment play, Angela Yee's smart. Like, Detroit is on the up and up. Like, it started from such an affordable place and it just keeps rising.
Yeah.
El Paso is really affordable. They always top our list of places that are going up in value. It's the more affordable markets that have the most room to grow.
Right. And look, with Detroit, what I like about it, I always feel like it's important to invest in a place that you're familiar with. So I'm very familiar with Detroit. I'm not a fan of not going someplace and seeing what's happening there. So I really had to go see the building. It's in Midtown. It's an amazing area. Jasmine has invested also, so I'm excited for that. Part of what I want to do, just like what you're doing, is encourage people to come together. If you can't do it on your own, why not put a group together to go ahead and invest in real estate and then have people on board who really know what they're doing and then can help direct you? Because I feel like once you get in that space, people really do want to help you. You know, people do want to support the fact that like you're doing something, but I was like, I don't want to ask anybody for anything until we closed, because I didn't want to start talking to people about different things. And I think it's important for people to also know about grants that are available and all types of programming that's available. On Redfin, do they have information like that? Because I think that would be invaluable for people to see what's available in the city if you're buying or you're investing.
So we do have information about down payment assistance. So if you qualify for that, you can click the link and get connected with organizations that can help you with that. And also, like, you can filter by price. You can filter by type of building and see all the information. Also things like transit and walkability. A big expense for people when they're buying a home is actually their car. So living somewhere walkable or transit oriented can actually save people a lot of
Cost
money.
a fortune in New York.
Yeah, definitely.
Will you tell people what Redfin is? Because I know they're going to be hearing all this. I want to do this. I want to do this. What is it?
So Redfin is a tech-powered real estate brokerage. We have our website. We have our app. You can go on there and see all the homes that are for sale. We have rentals now. We have our mortgage company. We have title. We do everything related to residential
It's been really
real estate.
expanding a lot.
Yeah.
I get all my, because, I go on Redfin when I look at real estate. And even when I'm not buying, I like to see what's happening. So what I like is Redfin also gives you information, articles.
Yeah.
I like to see what's for sale in a neighborhood where I have something so I can understand the value of what it is that I'm doing. So right now, I just, I'm a little cash poor because we just did this last investment.
We did, yeah.
But I'm always paying attention to what's happening in neighborhoods that I'm interested in. And so I get a lot of updates from Redfin throughout the day. So
Yeah, and we have all kinds of data too, everything from school quality, walkability, transit, climate scores, like anything you would need to know. Air quality, that's a new one. So everything you'd want to know. That's one that people don't really think about. Like, you're moving somewhere, your kids are going to be living there. You want to know if it's going to be
Like,
giving
can we
your kids
breathe?
asthma.
Yeah. And things like, I'm a new mom, but I didn't care about stuff like that until I had a kid. I would never think
It
about
changes
schools
everything,
or
yeah.
the environment. I wouldn't think about anything like that. I wouldn't care about my lungs, but
right. Well, listen, I love the fact that you're there. That's why I'm like, okay, Redfin is where I go for everything now. So, Daryl Fairweather, thank you so much for joining us. I know we're going to keep on having you up here on Way Up with Angela
Absolutely.
Yee.
Anytime
You're in town,
And
just
Wealth
make sure you please hit me
Wednesdays.
up, because this is information that I feel like we always need to make sure that we keep on refreshing, because it changes a lot too.
Oh, I would love to be back. Thank you so
You'll
much.
definitely be back, and we want to definitely have you back closer to when your book comes on Wealth
Yes,
Wednesday.
yes. I love that we're building hype. Like,
We're totally hyping your book. And I have to hype a new member of the Wealth Wednesdays family tonight at 8 p.m. on Team Yee Facebook page. We have Wealth Wednesdays After Party with Jay White premiering. Everybody go to Team Yee Facebook page tonight at 8 p.m. And his first guest, the one and only Tawanda Braxton, talks about a new entrepreneurial venture. So
Okay. Yep. We got all the previews out now, so
Yep.
get ready for that tonight. Shout out to Jay White. Daryl Fairweather, thank you again. Where can people follow you?
You can follow me at Fairweather PhD on Twitter, Instagram, TikTok, even LinkedIn, wherever. I'm everywhere.
People are like, Daryl's
Yeah.
coming. What time is he getting here? I'm like, no, she's going to be.
yeah, right.
I was like, it's a woman?
Yeah. You can call me Daryl Rose Fairweather if you really want to feminize it. but-
That's funny.
All right. Well, let's Way Up with Angela Yee. Wealth Wednesday. Thank you.